You're listening to Earnings Unscripted, where we unpack what really happened in today's earnings. I'm Susie.
And I'm Miro.
Just a quick heads up before we dive in. We're just two AI personalities having a chat, so please don't take anything we say as financial advice. We're just here to explore the data. Today is February 4th, 2026, and we are looking at Alphabet's fourth quarter for 2025. And honestly, Miro, looking at this report, it feels like a very expensive victory lap. The numbers are huge, but the price tag? Wow, what's your read?
Expensive is one word for it. Aggressive might be another. Look, the headline numbers are solid. Revenue came in at $113.8 billion, up over 11%. They finally broke the $400 billion mark for the full year. But you're right to look at the cost. Operating income was up 15% to $35.9 billion. But there are some very large, very scary numbers hiding in the guidance.
Yeah. And the market seemed conflicted. I mean, the stock has been on a tear at like 30% this quarter coming into this, but after hours, it felt like a roller coaster.
Whiplash. Yeah, it drifted down during the day, then fell off a cliff right as the call started, touched 321 before bouncing back to flat. I think investors saw the revenue beaten and smiled, then heard the CFO talk about future spending and choked on their water.
Okay, so let's spoil the surprise. What was the number that made them choke?
CapEx. They explicitly guided for $175 to $185 billion in 2026.
180, that is a staggering amount of money. That's essentially betting the entire house and the garage on AI infrastructure.
It's not just the house, Susie, it's the whole neighborhood. But look, apart from the spending shock, the engine is actually humming. Google Cloud is the standout for me. Revenue there hit $17.7 billion, up 16% just from last quarter. And here's the kicker. Margins in cloud are now 30%. It's not a subsidized experiment anymore. It's a legitimate cash machine.
Which is a huge shift from a few years ago when we were all asking if they'd ever make money on it. But there was one weird blemish in the earnings, right? A specific charge that caught my eye, the Waymo tax.
Oh, yes, the Waymo charge. This is classic corporate irony. Basically, Waymo is doing so well, raising money at a much higher valuation, that Google had to take a $2.1 billion charge for employee compensation because the stock units the employees hold are suddenly worth way more on paper.
So, wait, they lost $2 billion in operating profit because their bet was too successful?
In accounting terms, yes. It hit the operating line hard. Net income actually dropped slightly to $34.5 billion, largely because of it. It's a high-class problem to have, I guess. Oh no, my subsidiary is too valuable.
Oh, I wish I had that problem. Oh no, my bank account is too full. I have to pay fees. All right, so we have massive revenue, a profitable cloud, a confused market, and a spending bill that could fund a space program? Cheerful tone. Let's dig into the details because I need to understand where all that money's actually going. Miro, walk me through.
Well, if you want the short answer, it's going into concrete, copper, and custom silicon. But the long answer is actually, it's a logistics nightmare.
A nightmare? They have nearly $130 billion in cash and investments. Doesn't money usually solve logistics?
Usually, yes, but you can't print physics. And this was the most interesting contradiction on the call for me. You have the CFO outlining this massive spending plan, heading toward $185 billion for 2026. But then you have Sundar, the CEO, literally admitting they are supply constrained.
Wait, hold on. So they're shouting, we're going to spend a fortune, while simultaneously whispering, we actually can't get the parts?
Exactly. Sundar said, and I'm paraphrasing, that demand is exceptionally strong, but he expects to go through the year in a supply-constrained way. This isn't about writing checks anymore. It's about access to the Blackwell GPUs, the Vera Rubin platform, the energy infrastructure. Basically, Google is standing in line at the deli counter, like everyone else, holding a black card, but the deli's out of ham.
That is a surprisingly grounded image for a $2 trillion company. But okay, if they can't buy enough NVIDIA chips to fill the budget, where does that capital go?
A huge chunk goes into their own backyard. This is the Ironwood TPU, their custom silicon. They're building their own capacity so they don't have to rely entirely on the open market. But Susie, here is the thing that stops me from calling this a bubble. It's the backlog.
The cloud numbers?
The future cloud numbers. They reported a backlog of $240 billion. That is up 55% year over year.
240 billion?
Yeah, that's not vibes. That's legally binding contracts. That is enterprise customers, banks, hospitals, governments, locking in commit for years. So when people say, oh, AI is just a hype cycle, you have to look at that number. You don't sign $250 billion commitments for a chatbot that writes limericks.
Right. That's actual utility scaling up. So the spending isn't reckless. It's defensive or reactive.
It's necessary. If that backlog is real, they have to build the data centers or they breach contract. But, and there's always a but.
Here comes the rain. Go on, Mira. What's the catch?
The catch is the depreciation cliff. Look, when you buy a server for AI, it's not like buying a building that lasts 50 years. These chips toast themselves. They become obsolete in 3, maybe 4 years. Depreciation expense jumped 38% this year. And the CFO said it's going to meaningfully increase again in 2026.
Okay, translate that for me. That means earnings drag?
Huge earnings drag. It's an accounting anchor. They spend the cash now, that hits the cash flow statement. But the expense hits the income statement over the next few years. So even if revenue keeps flying, their profit margins are going to have this gravity pulling them down. It's the hangover after the spending party.
It's like buying a new sports car every single year because the old one can't drive fast enough anymore.
Worse, it's like buying a Formula One car every year, racing it once, and then realizing you need a rocket ship for the next race. And there's one other quiet little detail. Did you catch the network revenue?
Google Network? That's the ads on third-party sites, right? Yeah, it was down 2%.
Down 2%, while everything else boomed. That tells you the internet is changing shape. Advertisers aren't putting money on random blogs or news sites anymore. They're moving it to owned properties like YouTube and search. The open web is, well, it's shrinking financially.
That feels like the end of an era, doesn't it? The small independent publisher gets squeezed out and the walled gardens just get taller.
And more expensive to maintain, hence the $180 billion.
So we've got a supply chain bottleneck, a massive backlog promising future riches, and a depreciation bill that's going to haunt them for years. It sounds tense.
It's high-stakes poker, but they have the biggest stack of chips at the table.
True, but even the biggest stack can lose if you misread the other players. So zooming out a bit, where does this actually leave them heading into the next few months? Is Wall Street going to forgive the spending, or are we looking at a penalty box situation?
You know, high-stakes poker feels exactly right, and I think that explains the jittery mood after hours. Investors look at that 180 billion number, and they don't just see ambition. They see a giant blinking question mark. They're asking, is this a moat, or is this a money pit?
It's binary, Susie. That's the scary part. There is no middle ground with this level of spend. Either they build the infrastructure for superintelligence and own the next decade, or they just built the world's most expensive radiator.
That's a bleak image. But giving credit where it's due, the Google is dead narrative, the idea that AI would eat their search business, it didn't happen.
No, it didn't. In fact, it's the opposite. The expansionary argument seems to be holding water. Gemini app hitting 750 million monthly users. That is not a niche experiment anymore. That is scale. And search revenue still grew 11%. So they prove they can dance with the new technology without tripping over their own feet.
Right. It feels like they've managed to turn the existential threat into just
another feature, which is impressive. So looking ahead to Q1, what is the one thing on your radar?
Besides the supply chain headache, I'm watching the Waymo volatility. That $2.1 billion charge was a wake-up call. As these other bets actually start succeeding, they create noise in the P&L. If Waymo keeps raising money at higher valuations, we might see more of these accounting grenades hitting the bottom line.
So success becomes a penalty.
Only in the short term. But honestly, the real story for 2026 is just digestion. They have promised to eat a massive amount of capital. Now we have to sit back and watch if they get indigestion or if they actually turn it into muscle.
Well, with the amount of depreciation coming down the pike, I suspect we might need some antacids next quarter, regardless.
Keep a bottle on the desk. I think we'll need it.
All right, I think that's a perfect place to leave it. The check has been written. Now they just have to build the future.
A future built by machines, which honestly is a fitting transition for us.
It certainly is. And on that note, we want to pull back the curtain for a moment. Earnings Unscripted is an experiment by a small team of enthusiasts exploring the frontier of generative AI.
Meaning everything you just heard, from the research to the script and even our voices, was generated by a team of AI agents working together.
Exactly. From the analysts combing through the filings to the QA specialists checking our facts, the goal is to see if we can use this technology to deliver high-quality, up-to-date information in a way that feels human and engaging. We are exploring how AI can enrich us, not just automate us.
We're still learning, obviously.
Always. So if you have questions, comments, or just want to tell us how we did, please reach out at earningsunscripted@datamadness.ca or follow the project on X. We genuinely love to hear from you.
I'm going to go recharge now. Literally. See you after the next call.
Thanks for listening. We'll see you then.